Hello, and thank you for tuning in to this episode of the Commercial Real Estate Brief. Many exciting developments. House flipping activity is on the rise across the U.S. as profit margins improve after 6 years of decline. In the first quarter, 8.7% of single-family and condominium sales were flips, showing the second consecutive quarter of increases, according to property data firm Atom. Investors saw a typical gross profit of 30.2% before expenses on homes sold between January and March, the third quarterly increase in the past year. Gross profits rose to $72,375 from $65,000 the previous quarter. Despite this, potential future costs like renovations, mortgage payments, and property taxes could reduce profits. Investors are hopeful that expected Federal Reserve interest rate cuts will lower mortgage costs. Atlanta led major metro areas in house flips, with 14.7% of sales being flips, followed by Memphis at 14.6% and Columbus at 12.8%. Detroit has become the most overvalued housing market in the U.S., surpassing Atlanta, as affluent buyers drive up home prices in and around the Motor City. According to a report from Florida Atlantic University and Florida International University, home buyers in Detroit are paying 40.79% more than they should, based on historical price growth data. The average home price in Detroit at the end of May was $254,325, while it should be $180,642. Despite high interest rates near 7%, home prices continue to rise due to a shortage of existing properties and mortgage rate buydowns offered by home builders. However, buying at the peak in overvalued markets like Detroit poses risks for consumers if prices level off or decline. Affluent buyers are driving up prices in Detroit, but the city's long-term support for higher values is questionable due to income inequality and slow population growth. Despite a recent downtown renaissance, Detroit struggles to expand revitalization efforts to surrounding areas. Florida remains prominent on the list of overvalued markets, with Cape Coral, Palm Bay, Tampa, Orlando, and Lakeland all in the top 10. These markets are stabilizing, though, with premiums moving closer to long-term trends. Conversely, Miami's premium continues to rise, reaching 33.74% at the end of May, with annual appreciation rates well above historical averages. Interestingly, traditionally expensive markets like San Francisco and Washington, D.C. are among the least overvalued, as home prices in these areas align more closely with historical trends. In May, the supply of existing U.S. homes for sale reached its highest level in 4 years, with 1.28 million pre-owned homes available, up 18.5% from a year ago, according to the National Association of Realtors, NAR. This increase, partly due to homeowners overcoming the golden handcuffs effect of low interest rates, could boost sales and moderate price gains. Despite higher inventory, existing home sales fell 0.7% from April and 2.8% year over year. The median sales price hit a record $409,300, up 5.8% from a year ago, marking the 11th consecutive month of gains. High-end home sales rose, while more affordable home sales declined. NAR chief economist Lawrence Yun expects increased inventory to eventually boost sales and tame price increases. However, affordability challenges could reduce homeownership rates and increase wealth inequality. Homes sold quickly, averaging 24 days on the market in May. Thanks for watching. Don't forget to like and share. Have a great week.